IFRS 16 leases. The objective of this video is to explain the presentation on the face of the statement of financial position of either a prepaid lease expense or an accrued lease expense when you are dealing with a low value asset lease and the company has applied the recognition exemption. Before you continue to watch this video, please make sure that you've worked through the remainder of example 5 in the IFRS 16 notes and examples document, and that you've also watched video 2 on IFRS 16 leases. That video and the rest of this example will explain all the amounts that we are looking at in this video. We will now specifically focus on the presentation on the face of the statement of financial position of Giggly Limited, which is the topic of example 5. Please note that you would only be required to give the current and the prior year as a comparative amount in an actual set of financial statements or in a test when comparative amounts are required. It's for illustration purposes that we are showing you all 8 years of this lease agreement, and specifically now looking at the presentation of your prepaid lease expense. In this example, it is a low value asset lease running over 8 years. In the first 4 years, the amount paid by the lessee is more than the straight-lined lease expense. So for 4 years, the lessee builds up a prepaid lease expense account, which equals an amount of 54,000 Rand that has built up in that account. And that represents the prepayment annually of 13,500 for 4 years. So your balance at the end of year 4 is the 45,900 plus the 8,100, and that equals the 54,000 Rand balance. But what we want to focus on in this example is this presentation of where you are showing this 8,100 as a current asset. Before we continue, let's just revise the principles of IAS 1 on the presentation of financial statements. In terms of IAS 1, all assets and liabilities must be presented on the face of the SFP as either non-current or current. The guidance provided in IAS 1 for determining the current portion relates to how much of that balance at year end which you are trying to present will show movement out of that account in the opposite direction of the year end balance within the next 12 months. To link this back to existing knowledge, let's talk about your inventories balance at year end. Inventories, as you know, is normally presented as a current asset. The reason for that is you are expecting to sell your inventories in the next 12 months. When you sell your inventories, it will move out of the debit balance with the journal entry, debit cost of sales, credit inventories. So that full balance is expected to move out of the debit account in the next 12 months. That's why it's presented as a current asset. The same for trade debtors. It is a debit balance as an asset at year end. You expect your trade debtors to pay you within the next 12 months. When they pay, the journal entry would be debit bank, credit trade debtors. So again, it is movement expected out of the balance in the opposite direction in the next 12 months. Let's now apply that same principle to my prepaid lease expense. At the end of year 4, at the end of 20x12, the total balance on the prepaid lease expense is 54,000 Rand. You have created that balance by writing a journal entry for 4 years. In 20x13, in year 5, 8,100 of that balance at the end of year 4 will move as a credit entry in the opposite direction out of the prepaid expense account when you start utilizing this prepaid balance that the lessee has built up over 4 years. So yes, the 8,100 is a credit out of the account in year 5 only. But at the end of year 4, you have to present that portion of the balance that will move out of the account in the next 12 months as a current asset. And that's why the 8,100 is presented as a current asset at the end of year 4. You are not reducing your balance. You are not changing the year-end balance. You're only presenting the balance that you have built up over 4 years in a current and non-current portion. This same principle will then apply at the end of year 5, year 6, year 7. If we look at the end of 20x15, the full balance on this account is 18,900 Rand. All of it is now presented as a current asset because in year 8, the remaining balance on my prepaid will utilize in full. So the full balance at the end of 20x15 is a current asset because all of it will utilize within the next 12 months. At the end of 20x16, the full prepaid that was built up over 4 years has now been utilized in the following 4 years. So after 8 years into this lease agreement, there's no longer any balance left on this prepaid account.